Commerce article. Indian banking sector, emerging trends and major challenges. It is identically true that the speed and direction of the growth of different areas of an economy depend upon the well-planned, progressive and organized banking sector of a country. Considering the significance of banking sector in India, many effective steps are being taken time to time by the Government of India. After the life-threatening epoch of the global pandemic COVID-19, the Government of India is taking required and innovative steps according to the changing necessities of the global banking and financial sector. Due to such efforts, the Indian banking sector is maturing again and achieving new heights in the current changing sphere of time. Due to the support of fintech companies, progressive startup ecosystem, digital revolution, robotic and artificial intelligence, innovative banking infrastructure, appropriate capital adequacy ratio, effective system of assets management, ease additions, adoption of blockchain technology, etc. So many progressive signals can be observed in the present banking scenario of India. All these shining and strong evidence proves the upward growth track and speediness of the Indian banking sector. But on the other hand, the Indian banking sector is facing several organizational and structural challenges and problems. Major indicators and trends of the present Indian banking sector can be numbered as under. 1. Increasing credit deposit ratio. According to the latest report published by the RBI, the credit, loan, growth of Indian banks is increasing by 20 to 5% per year while deposit growth is increasing by only 131%. Due to this imbalanced trend, the credit deposit ratio has been reached up to 82%. In the opinion of experts, the ideal position of this ratio should be as 65 to 75%. This situation creating the problem of liquidity or shortage of cash in the banks. The credit and deposit growth of Indian banks can be enumerated as follows. Table 1. 2. Commencement of Green Deposit Scheme. This ambitious scheme has been declared on 1st April 2023. Notable that this new scheme is an investment scheme based on the pattern of traditional fixed-term deposits, but some extra interest will be paid to the investors of green deposits and the money collected under this scheme will be used only for the promotion of renewable energy, sustainable water projects, clean and green transport prevention and control, manuportation, waste management, manufacturing of eco-friendly products and services, construction of green buildings and other green projects. A bank may promise that green deposits will be used towards financing only eco-friendly projects. In short, it can be stated that the main objectives of this scheme are to control the increasing carbon emissions in our country, to stop the ecological imbalance caused by climate changing, to create a strong green finance ecosystem in our country. 3. Enlargement of digital payment system. To achieve the targets of the Mission Digital India, the government is trying to make the Indian economy as a cashless and paperless economy. The main objective of the Mission Digital India is to increase the transparency among monetary transactions and to minimize the corruption and black marketing of the goods. At present, the Indian banking sector is witnessing a digitalization revolution under the banner of tech innovations. The digitalization has entirely changed the way of functioning of Indian banks. Due to digitalization, the banking services are not just limited to the branches, but it has made a way into handheld devices. The present phase of digitalization is more intense and impactful, which has huge potentials to change the overall structure of the Indian bank ING sector. Considering the cumulative standing and importance of digitalization in India. According to the latest data, in the financial year 2022-23, near about 9 crore digital transactions having the value of 2086 lakh crore have been made in India, while this amount was only 1744 lakh crore in the financial year 2021-22. In India, there were only 162 crore transactions of retail digital payments in 2012-13, which are increased up to 14,726 crore in 2023-24. It is also notable that in the financial year 2022-23, India's share in real-time payments at global level was 46%. Nowadays, so many techniques and instruments have been used in the digital pay ING, mobile banking, banking cards, meant systems such as Internet Bank, POSIPs, Micro ATM, BHIM, USSD, UPI, etc. The Unified Payment Interface System, UPI, is the most popular technique in these all techniques of digital payment system. The overall share of UPI in digital payment system has been reached at 0% in 2023-24. It is also notable that total 11,760 crore transactions of UPI have been made in 2023-24, which were only 43 crore in 2017. 4. Initiation of Open Network for Digital Commerce, ONDC. ONDC is a financial product affiliated with the government digital platform. With the help ONDC, all transactions related with personal loan, grocery, insurance, investment, mutual funds, food items, etc. can be performed rapidly. All the desired infrastructure facilities regarding ONDC are being developed in our country, and it is hoped that in very short time, it will be available in the market. Some reputed fintech companies such as Bajaj Alliance, Tata Capital, Aditya Birla, Kotak Mahindra Bank, etc. are trying to associate with the ONDC. Experts say that up to 2026-27, 25% population of India will be able to use e-commerce transactions, and near about 12 lakh salesmen and 90 crore buyers will be associated with the ONDC. It is estimated that with the help of ONDC near about 4 lakh crore transactions will be made in every coming year. Basically, ONDC will help in the following 3 financial segments. 1. Credit segment. 2. Wealth segment. 3. Insurance segment. 4. Regular growth in the business of credit cards. The business of credit cards is treated as an important component of digital revolution, and at present it is growing regularly. According to the latest report published by the RBI, in 2018-19 only 4 to 7 crore credit cards were issued, but this number has been reached up to 85 crore in 2022-23. Up to 31st December 2023, 9 to 79 crore credit cards have been issued, and it is estimated that this number will be reached up to 12 to 7 crore in 2024 to 25. 5. Increasing trend towards doorstep banking. In our country, all public sector banks mutually present significant customer-oriented services predicted by Government of India under Ease of Banking Transformations. Doorstep banking, DSB, is also one such initiative taken by Public Sector Banks Alliance. Nowadays, some private sector banks also providing DSB facility. Table 2. 6. Growing trend of family loans. According to the Financial Stability Report published by the RBI in February 2024, family loans in India are regularly increasing. In March 2018, the amount of family loan was only 52 to 4 lakh crore, which has been reached at 102 to 5 lakh crore in March 2023. The trend of regular growing of family loan can be seen in the following table. Table 3. The above table shows that an average rate of family loan is increased as ING by 14% per year in our country. It is also notable that the family loan distributed by the non-banking financial companies, NBFCs, is increasing by 24% per year, that is more higher in comparison to banks. 6. Commencement of Interoperable Payment System. Interoperable Payment System, IOPS, is an important component of Payment Vision 2025. This vision was released in June 2022 by the Department of Payment and Settlement Systems of the RBI. Experts say that the one OPS will facilitate quicker settlement of funds for merchants and it will remove the extra time of receiving the actual payment. The RBI has given approval for implementing IOPS to NPCI Bharat Bill Pay Limited, NBBL. It is hoped that IOPS for Internet banking is likely to be launched during the current calendar year. 7. Inclination towards Unchan gave policy rates of the RBI on the basis of an assessment of the current and evolving macroeconomic situation of the country. It is decided by the MPC, Monetary Policy Committee, of the RBI on 5th April 2024 to keep the repo rate unchanged at 6 to 5% under the Liquidity Adjustment Facilities, LAF. Notable that the repo rate is a rate of interest on which the RBI gives loans to the commercial banks of our country. Due to this pausing decision regarding the repo rate, all the other related policy rates remain unchanged, which can be seen with the help of following table. Table 4. 8. Increasing higher education loan. Facts and data issued by the Indian Bank Association says that the number of students taking higher education loan has been increased by 2 times in the last 4 years. In 2018 to 19, the loan for higher education was received by 2,68,439 students, but in 2022 to 23, this number of students has been increased up to 5,74,832. It is also a remarkable point that the students of states of South India like Karnataka, Andhra, Tamil Nadu, Telangana, Kerala, etc. are taking more higher education loan in comparison to the students of North India. Notable that in the period of last 10 years, 39,269 crore have been distributed as higher education loan to 461 lakh students by the Indian banks. During last 10 years, the number of students required higher education in foreign countries has been increased by 215%. In the month of January 2024, the actual amount of higher education loan has been increased by 23% in comparison to the amount of January 2023 and reached up to 1 to 17 lakh crore. 9. Increasing role of fintech companies. At present, near about 4,200 fintech companies, including 23 unicorns startup companies, are working in India. Intech companies means that companies who provide solutions and assistance to the entrepreneurs and institutions regarding management of financial as well as technical problems. Such fintech companies play a vital role in the development and growth of Indian banking sector. Notable that fintech companies are providing their assistance in different segments such as insurance, investments, neo banking, payments, lendings, etc. The size of fintech market in India was 48 to 64 lakh crore in 2022 and it is estimated that it will be reached up to 17488 lakh crore by 2030. 10. Commencement of Public Tech Platform for Frictionless Credit, PTPFC. It was launched in August 2023 in our country. It is an important platform that provides basic information regarding loan credit and other financial instruments to the loan providers as well as loan receivers also. With the help of such information, they are solving their doubts and problems related with loan issues. Mostly, this platform provides information related with seamless disbursal of non-collateral based loans for MSME, loans for dairy farms and related products, personal loan, housing loan, etc. On the other hand, Kisan credit loans up to 16 lakh are also provided by this platform. At present, following important information are provided by the PTPFC. Facility of plug and play Aadhaar eKYC verification of PAN. Facility of application program sector is facing so many administrative and structural challenges. Data collected by account problems, some of them can be point aggregator, etc. 11. Initiation of RRB in interbank call money market. In October 2023, an experimental project related with wholesale digital RRB was introduced by the RBI. In this project, total 9 banks, 5 private and 4 PSUBs are playing an important role as participatory banks. Notable that call money market call a dynamic role for short-time loans in the banking and financial sector. Now, all such participatory banks are performing transactions with the help of this wholesale digital RRB on the basis of T+0 mode instead of RTGS. In the process of T0 mode, transactions are being performed on the same day. 12. Instigation of lightweight payment and settlement system, LPSS, in a positive change to address probable troubles triggered by disastrous and calamitous events or unwanted situations. The RBI has exposed a new initiative named Lightweight Payment and Settlement System, LPSS. This innovative system aims to provide continuous financial services even when traditional payment arrangements like RTGS, NEFT, UPI, etc. are temporarily inaccessible due to troubles in underlying information and communication system. Notable that all such conventional payment systems depend upon multifaceted supported networks along with advanced infrastructure of information technology. In addition to this, these traditional systems are also vulnerable to being rendered out of order during undesired natural calamities, mishaps, accidents, internal-external wars, disasters, etc. But the LPSS has been designed on the basis of many hardware and software facilities. This new system of LPSS can be operated from any location with the help of minimal personnel requirements. It will facilitate uninterrupted essential payment services even during extreme conditions. It is hoped that LPSS will create public confidence in digital payment systems and it will retain the liquidity channel of the financial market. 13 Major Challenges Problems. At present, the Indian banking sector is facing so many administrative and structural challenges problems. Some of them can be printed out as under. Decreasing CASA ratio of the Indian banks, the current account and saving account ratio, CASA ratio, of Indian banks is decreasing regularly. It has become a matter of strain and stress for not only officials but also for policy makers. Actually, CASA is treated as a very easy and inexpensive low-cost source of funds for banks. But nowadays, the interest of investors is being shifted towards equity market as well as mutual funds. Due to this changed attitude of investors, the balance of current and saving accounts of the banks is declining frequently. Desiring CASA ratio of some major banks can be seen with the help of following table. Table 5. Increasing number of willful defaulters. According to the report published by TransUnion CIBIL, India's pioneer information and insights company, the amount of willful default in Indian banks is increasing each year by 50,000 crore. In 2022, the amount of 14,899 willful default accounts was 3,04,063 crore, which has been reached up to 3,53,874 crore in 6,883 accounts in 2023. Notable that at present, SBI, the biggest bank of our country, shows the largest willful default amount. Crisis of viability of payment banks after approval of the RBI. Payment banks in India were initially envisioned in 2015. In the beginning, license for operation was given to 11 payment banks. But due to shortage of capital, much more operational cost, limited network, inadequate sources of income, only 6 payment banks are working in our country. Actually, payment banks are operated as digital companies and they can open only saving and current accounts. They cannot undertake non-banking financial services on their own. They do not have any right regarding granting of loan and issuing of credit cards. They are providing services to the lower income families, unorganized institutions, small traders, etc. It means they play a vital role in the field of financial inclusion. In our country, payment banks are authorized only for services regarding online banking, mobile banking and issuing of debit cards. Notable that, recently, The RBI has identified repeated regulatory non-compliance issues of Paytm Payment Bank and imposed BUSI-NES restrictions. This critical situation highlighting the challenges faced by the payment banks in keeping regulatory and governing loyalty. Major challenges before Indian payment banks: lack of clear business model, low avenues of profitability, large number of dormant accounts, shortage of capital and funds, high operational cost, limited sources of income, etc. Increasing unsecured uninsured deposits. According to the Financial Stability Report released the RBI in December 2023, uninsured deposits MOI of Indian banks has been increased in a year up to the 463% from 44 to 2%. Basically, unsecured or uninsured money of banks belongs to a such money which has not been insured under the jurisdiction of Deposit Insurance and Credit Guarantee Corporation, DICG. Report says that foreign banks have only 0.51% insured money. It means 99 to 49% deposits of foreign banks are secured. On the other hand, 2/3 part of total deposits of private banks is uninsured unsecured. This critical situation of unsecured deposits in Indian banks can be enumerated with the help of following table. Table 6.